Gentlemen, good day and welcome to Music Broadcast Q3 FY2024 earning conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashit Concall, COE of Music Broadcast Limited. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining the Q3 FY24 earnings call for Music Broadcast Limited. Joining me on the call is Mr. Rajiv Shah from our IR team and our investor relations partner, Strategic Growth Advisors. I'm pleased to share the financial outcomes of our company for Q3 and the 9-month FY24 with you. These accomplishments are the result of dedication and hard work of our team and demonstrate our unwavering commitment to promoting growth and innovation in the ever-changing field of media and entertainment. For Q3 FY24 and 9-month period FY24, revenues grew by 11% and 13% respectively. EBITDA during the same period grew by 5% and 25% respectively. During the quarter, we made certain investment in employees in the digital side of the business. Digital business has the potential to open new revenue streams, enhance operational efficiencies, and enhance customer experiences in the long run. For the quarter, our digital business has experienced a substantial 27% growth compared to the previous year, demonstrating our agility in meeting shifting preferences and audience demands. We believe our radio digital strategy has proven successful and a substantial portion of our additional revenue will translate into operating profits going forward. On the growth in the advertising sector, notable advancements have come to the forefront. Notably, the jewelry industry saw a substantial growth of 44% year-on-year increase in the advertising spending. The pharmaceutical market grew by 15% and the auto industry exhibited an impressive 26% growth compared to the previous year. The finance industry witnessed a growth of 9%. The government public service ad sector showed commendable growth at 22%, and real estate advertising increased by 17% year-on-year. These sector-specific insights empower us to adjust our strategies and customize our services to meet the evolving needs of our clients. At Radio City, we have executed a range of strategies to expand our positioning in the radio industry. In the third quarter, we successfully retained a market share at 19% in our ad check markets. Additionally, our comprehensive omni-channel framework allows us to maximize the extensive reach of our network, ensuring the delivery of optimal value to our clients. Radio City continues to attract a significant share of both our existing and new clients, with 40% of our clients on the radio platform choosing us for their advertising needs. Among new clients, 33% have selected Radio City as their advertising platform of choice, further establishing our position as a preferred choice in the advertising landscape. We take great pride in our commitment to diversify revenue streams, with 31% of our revenue stemming from various sources such as properties, proactive pictures, digital ventures, sponsorships, and special events. This diversified strategy plays a pivotal role in strengthening our overall financial resilience and stability. Furthermore, we have achieved the second largest client count share in the industry, reaching 40% in the 9-month FY24 period. This stands as the testament to the strength of our client relationships and the value we consistently deliver. In summary, our experience at Radio City is defined by progress, innovation, and flexibility. We are dedicated to delivering top-notch content, broadening our market positioning, and staying ahead in the dynamic landscape of the media and entertainment industry. Now, coming to the financial performance highlights for Q3 and 9-month period FY24. For 9-month FY24, revenue grew by 13% year-on-year to rupees 165.9 crores. EBITDA grew by 25% year-on-year to rupees 40.10 crores, while EBITDA margin expanded by 235 BPS to 24.2%. Adjusted profit after tax, which is adjusted for the interest on NCRPS to the tune of 5.8 crores, stood at rupees 9.7 crores. For Q3 FY24, revenue grew by 11% year-on-year to 60.4 crores. EBITDA grew by 5% year-on-year to 15.3 crores, while EBITDA margin stood at 25.3%. Adjusted profit after tax, which is adjusted for interest on NCRPS to the tune of 1.9 crores, stood at 4.5 crores. In conclusion, I want to highlight that the way people in India consume media is changing. With lots of content choices, the radio industry can now use digital platform alongside traditional radio. At Radio City, we are staying updated with the latest trends by investing in digital technology to match what our audience likes. With this, I would request the moderator to open up the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all participants, you may press star and 1 to ask question. The first question is from the line of Sanika from Aparis Capital. Please go ahead.
Hi, am I audible?
You'll have to be slightly louder, Sanika.
Yeah, am I audible?
Now you're audible, yeah.
Yeah, so I want to know what are going to be the main growth drivers for the company, and in like next 2-3 years, what is the vision for our company? Like, where do we see our company?
So, if you look at the way we have positioned our businesses, we have kind of extended ourselves beyond radio, as you would have, if you're closely watching us. So we have got various arenas through which we kind of generate our revenues. One is, of course, the pure play radio, traditional radio that we have got. The other most important thing which we have been talking about, which we believe is a lot for the future and even currently is now significantly contributing, is the digital part of the business, which is making our presence felt in the digital world through our presence in social media platforms, through our own channels, and through third-party platforms. The other is, very clearly, because we are in the business where we meet and engage brands to kind of experience consumers, we are also doing a lot of on-ground led events, which also is something which is contributing to now significantly, now that it's almost 2 years post-COVID, and we are able to effectively do a lot of events. So for us, it is radio, it's on-ground events, it's digital, and also building ourselves on content on third-party platform, which gives us the reach and distribution which brands look out for.
Okay. Thank you.
Thank you. The next question is from the line of Payal Shah from Brilliant Securities. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunity. I have 2 questions. First being, what are the reasons that our EBITDA margin growth is slower than revenue growth for this quarter?
So, if you remember, in the last investor call also, we had said that, in the middle of this year, we'll be investing in our digital play for the next 2 to 3 years. And largely, when we talk about that, it is investing on people and certain technology which will allow us to kind of expand our horizons. So, when you look at it, the way I would want you to look at it is to look at it for the 9-month period. But however, to answer your question on Q3, our investment in Q3 has been much more, and hence the margin of growth between the top line and EBITDA is shown differentially.
Okay, so just to follow up on that, like what kind of EBITDA margins should we expect going forward?
See, we are already delivering 25% approximate margin. I would believe that, very soon we should be seeing the erstwhile 30% margin that we were operating before COVID. And that's the first point that we are talking about. Beyond 30%, a lot will depend on the whole digital play that we are talking about. And we believe digital, I've been telling it time and again, for us, digital will be the EBITDA booster. So going forward from our short-term goal is to reach the 30% margin, and then of course, try and build it up from there as our digital business increases.
Sure, sir. Thank you so much for the opportunity.
Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Parth Varsani from JK Advisor. Please go ahead.
Hi. Good afternoon, sir. Thank you very much for the opportunity. Sir, I wanted to understand, have you seen any material increase in revenue due to this Ayodhya event, and do we expect this Ayodhya event to contribute to a good advertisement revenue going forward?
So, two reasons. Immediate, because it is, just happened in the current quarter, yes, there has been a marginal increase because we've been able to create properties using the whole fact that the world is looking at Ayodhya and Ayodhya was looking at a consumer increase in terms of the footfalls that the city was getting. So that's my first answer. The second answer is purely advertising is also very strongly related with the sentiments that the country carries, and if the mood and the sentiment is celebratory, we believe that when the mood is celebratory, consumption increases, and if consumption increases, advertising increases. So I look at it positively, saying that if Ayodhya, the way it is started, and if it continues to go the way it is, we will surely see a swell in advertising because of the mood being celebratory.
All right, sir. That is great, sir. So my second question was, how are we seeing on government advertisement spending as the elections are coming?
Yeah, so if you see, already the government spending has increased by about 22%. At the industry level, we have actually increased much more than that. So I personally believe that, a 35% to 40% growth is what one should look at from now till the time the election dates are announced.
All right, sir. That was really helpful, sir. Thank you very much. That is it.
Thank you.
Thank you. The next question is from the line of Ravi Shah from Bright Securities. Please go ahead.
Thank you for the opportunity, sir. I just had a question. What were the advertisement rates during the quarter, and by when do we expect to see increase in advertisement rates?
See, the advertising rate has been more or less the same from a Q2 to Q3 because largely the business has been increased from a volume perspective. The next point that I want to say is that the current level of utilization has reached about 85%. So now if it continues between now and it's always a story of once your saturation of your inventory happens, that's when rates get increased because that's beyond a point you can't take more, beyond the number of minutes that you want to take. So it's still come on to give you an answer in a different form. Our growth has largely come from volumes and not come so much so for rate. So the positive side to look at it is that there is still room for us to get our revenues increased through the rate route if we have to look at it from a future perspective.
Okay, sir. Thank you. That was helpful.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Kavin Shah, an individual investor. Please go ahead.
Hello.
Yeah.
Yeah. Good afternoon, sir. Congratulations on the good set of numbers. Sir, I just wanted to understand, since we are investing in digital, I would appreciate if you can elaborate more on the kind of technology which we are spending into and what kind of team we are building, just to understand how this business will, transform from radio to digital and what kind of revenue potential we can see coming up from digital in next 3 years or so. So just to understand on the overall, the picture.
Yeah. So, the play that we are talking about largely stems from the consumer behavior we are talking. So when we look at media today, consumers, apart from listening to traditional mediums like radio, is also consuming a lot of content on social media platforms, on FB, on YouTube, and so on and so forth, where their brands see that the consumers are engaging with content. So our investment is right now happening from 2 levels. One is people who are, well versed in the understanding of the behavior of the digital world in terms of how does the Gen Z, the millennials engage with various mediums, and also with the various channels that they kind of engage in terms of content consumption. So that means understanding how the Insta world works, how FB works, or how YouTube works. So we are working at 2 levels. One is creation of content. Second is distribution of content on social media platform, on other third-party platform, which will allow brands who come to us to reach out to a larger set of audiences. So there is an increased reach that the brands get, and thereby we get a larger set of value because we are delivering far more beyond radio. Yeah, that's the first answer that I'm giving. The second answer is that in terms of investment, we are doing multiple level of things. We are doing content creation. We are actively engaging our RJs as influencers. We all know about the social media world and how influencer marketing is taking over the world. So we are currently using all our internal resources as influencers when it comes to brands and engaging them with their consumers on the social media platform beyond radio, and also in our case even on ground. So we are taking out our strengths in terms of engagement with our listeners or consumers as far as brands are concerned, and straddling multiple media places, and thereby giving brands multiple opportunities to engage with their with their consumers.
And sir, apart from us, our competition, I'm sure, would also be, looking at the same strategy. Or am I wrong in my understanding? And what is our differentiator from them? Like, radio.
So differentiator will be, when you talk about the digital world, it's huge, from an influencer marketing to brand marketing to advertising funded programming to distribution of content and so on and so forth. So we have got multiple, strategies which is straddling each of those places where the consumers kind of, like for example, music discovery. Today, we are talking about our music discovery currently is happening through radio. But with the indie music, as we call the alternate music or indie music as we call, they don't really get a straight platform because Bollywood has taken center stage when it comes to music. Today, we are working closely with the indie artists for them to be discovered. And once when they are discovered by brands or even content creators, there is a whole lot of value and wealth created. And that wealth created, when it goes through us, there is a rev share that happens. So we are doing multiple things in the field of discovery of music, in the field of marketing ourselves, and largely we're using our fan following, which is our RJs, which is there across these spaces, and that is what brands look out for. Mm-hmm. So if you remember, while the world talks about independent music today, Radio City Freedom Award is the first platform we started about 12 years back, recognizing that there is an alternate world which is getting registered from a consumer choices concern. And this is 12 years back I'm talking about. You might have seen the last 2 to 3 years active, increase of interest in independent. But we are trendsetters in that sense. And for the last 12 years continuously recognized talent, awarded them, given them a platform, because we recognized them 12 years back when the world didn't recognize them. And today is the time we believe that we will now monetize by using them in various platforms, whether it is getting them to kind of view content to an OTT platform and so on and so forth. So there are multiple things that we are doing.
Mm-hmm. So, sir, is there any addressable market size for this? Or I'm wrong in understanding it's a very
huge market size. If you look at only the influencer marketing platform, that influencer marketing platform in isolation will be 3 times the radio revenues that we are talking about. in terms of the opportunity, just the influencer marketing. If you're looking at digital per se, it's already been 50% plus of the overall advertising market that we talk about. And world over, if you talk to marketers, there was a McKinsey study done about a year back saying that where do you think that you'll be investing your marketing money? Most of them felt that influencer marketing and social media marketing is where they'll invest 75% of their money. So then if money is going to be allocated to these mediums, we are already getting ourselves engaged in some form or the other and creating more and more opportunities for brands to be present in these mediums.
Mm-hmm. And my last question, sir, just to understand, on a global, in the global market or global industry in other countries of the developed nation, is there a, such transformation from radio to digital? Has some company done successfully and, have they grown from some X size to, say, multiples of X?
It's an evolution that is that very grown up. When you look at entertainment as a medium, it depends on how you're really looking at the medium. One classic example I can give you is, we all, since you all are investors, you would always know, all of you all would know about Ronnie Screwvala, right? He was only a television distribution and content creator company. That one fine day he decided that he believes that movies is parallel to the entertainment medium which he's closely working with. And the rest is history, as we all know, right? So while there are many global stories of brands transforming, and I think it is transformational transformation of people from the manufacturing industry through digital or the media industry to digital is a natural course that all of us will be following. The rest has followed possibly earlier. We will be following closely, and there is enough and more reasons to believe that. The way I look at it, I always keep saying that I'm in the marketing solutions business. So if there are brands and if there are consumers, and if brands want to engage with consumers, we will provide them the choice of consumers in the platforms of the consumer's choice. And hence today, I am creating content which is there in multiple platforms. Today, my content is there on streaming platforms. My content is there on all social media platforms, and most brands, consumers are lying there, and that's the way where they engage. So we are creating a lot of content which is straddling multiple media spaces for brands to engage with the consumers. And that is the world order right now. And we are already present in a small manner. As we increase the strength that we have, we'll be more and more deeper and richer in this distribution part of the business when it comes to reach from a brand's engagement.
Okay. Great, sir. Thank you very much, and good wishes.
Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Anand Shah, an individual investor. Please go ahead.
Hi, sir. Thanks for the opportunity. My question is regarding the appeal which we have filed with Supreme Court in the matter of judgment delivered by Madras High Court, where they have told that all the music provider has to pay 660 rupees per needle hour from the decade 2010 to 2020. And in your notes, you have said that in general assessment, don't foresee any outflow of economic resources. I would like to ask if by any chance the verdict is against the music provider, then what can be the possible liability arising out of the same by the prevailing monetary terms actually?
See, this has been there for years now, and as an industry, we are quite positive that there will be no adverse, judgment that will come against us. However, since right now it is still in the court of law, and we believe that the industry has a very strong point to fight for, and over a period of time, the results will come in. So, at this point in time, not just me, I think the entire industry is confident that there will be no liability, because we are very clear that we are paying as much that is required, and if there is any liability, that has to be with third parties or people who are using either the singers or the lyricists the way they are doing in generating their own business.
So in any case, even if the judgment is adversely against the company, there is no monetary outflow which can arise out for the company, even to say.
Sorry?
Even in the case there is an adverse judgment against the company, in that case also there cannot be any monetary outflow from the company side, even to say.
No, if there is an adverse, then the entire industry will have to go through the exercise and find what is the kind of outgo that one has to look at. But that is a situation that none of us are sure. All of us are sure that we'll not reach that, because, and plus this has been going for a while. If the case has been so simple, it would have been addressed long time back. It is not addressed because of the complexity, and we very strongly believe, not just us, we also have a battery of all our senior lawyers who believe that we have a case, and beyond that, honestly speaking, Anand, it will be speculation, and speculation is something which I can't really say much about.
I agree. The thing is that the party has filed the case and we lost in the Madras High Court. Madras High Court was given a judgment. In any case, like, the liability has to be assumed, like, if something comes up, then what can be the monetary liability the company can face off, actually? That's my question, actually.
See, Madras High Court is the reason why we very strongly believe, because the judgment was given on understanding which we very strongly now know that because it was done in I don't want to talk about the way the judgment is given, because it's sub judice and any comment from mine will not be right. But the Madras High Court judge has only given us more reasons to believe that we are in the right course.
Okay. Thank you, sir. That's from my side.
Okay. Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Ruchi Gupta from Value Consultancy. Please go ahead. Hello, Ruchi. The next question is from the line of Kastu, an individual investor. Please go ahead.
Hello?
Yes, we can hear you.
Am I audible?
Yeah, you are. Slightly louder will be better, but you are audible.
Sir, thank you for the opportunity and congratulations on a great set of numbers. Sir, my first question to you was, how much investment have we made in the digital business?
See, it's just a people business. Like I said, on an average, the kind of investment that you do on our staff is about 8 to 9% that we do on an average. But depending on the quarter to quarter, depending on which quarter we are, incubating some of the digital way forward incubation that we are doing. So, in some cases it will be marginally 10 to 12%, but well within the management of our P&L at this point in time. So, to answer your question, is there a substantial interest? No. But is there an interest which will affect our P&L? Yes, because, we are working with a very tight P&L. So, any additional investment will have a marginal outcome on our P&L.
Okay. And the second question was, is there any, there was an increase in the expenses, right? So any reason for the same?
See, Q3 being the most important quarter, there are certain investments, both from a marketing perspective and also from a creation of IPs, which goes a little higher. And hence, you will find that the investments are a little more, and hence the costs have gone up a little higher than what it would have been in the previous quarter.
Okay. So that would be it. Thank you so much.
Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Rajiv Shah from Bright Securities. Please go ahead.
Yeah, thank you again for taking my question. I just have a few questions. How is the advertisement spending market? And how did the festive season pan out? And as well, which sectors you expect to see good traction?
So, the festive season has been good, and the sectors which have done well is real estate, pharma, auto, and to an extent now even government for us, And I believe as we go forward, auto, real estate and pharma will continue to grow, and finance will grow in this quarter. Usually Q4 is the quarter where finance increases. So these are the sectors that will grow for Q4, and going forward, I believe real estate and pharma will continue to grow, and to be followed by auto.
Okay, thank you very much.
Thank you. A reminder to all participants, you may press star and 1 to ask question. As there are no further questions, I would like to hand the conference over to Mr. Ashit Kuken for closing comments. Please go ahead.
Thank you. We sincerely appreciate your participation in today's earnings call. We believe that the changing media and consumption habits of the Indian audience, driven by the availability of various content options, has created an opportunity for the radio industry to embrace digital platforms while maintaining radio at its core business function. Our focus continues to accelerate the digital future by leveraging resources and relationships to offer maximum value to our customers. The presentations, earnings release, and results are all available on the corporate website and stock exchanges. If you have any further inquiries, please get in touch with any one of us or with Strategic Growth Advisors or Investor Relations Partner. Wishing everyone a very happy New Year.
Thank you. On behalf of Music Broadcast, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.